Yeah. Well, hello, family. Good afternoon, joyous rising, good morning, good evening, good night, depending upon from where you're checking in. This is Dr. Kia Pruitt. It is Valentine's Day, February the 14th. Uh-oh, I hear an echo. February the 14th, 2023, and the time is 2:04 p.m. And as promised, I promised you all I would bring on this gentleman. But before we introduce him, let me just say he's been in business for 33 years. He has maintained an A+ rating with the Better Business Bureau. He's known for his excellent, superb customer service, and you all have reported about that. He is the most sought after speaker due to his extensive knowledge and his prophetic wisdom. I call him a prophet in the precious metals space. He is known as the Gold CEO. I call him the Gold Guru. Help me to welcome none other than the man himself,
Wow.
Andy Schectman, the Gold Guru, Gold CEO of Miles Franklin Precious Metals Company. Welcome.
Yeah, you're amazing. You are amazing. What an introduction. Thank you for having me. I really appreciate it.
You're welcome. It's my pleasure. I'm just grateful that you even graced us with your presence. You're
Don't
the
be
CEO
silly.
of a multi-billion-dollar company. Come on. I mean, we're just thrilled to have you.
No, I'm thrilled to be here. I
Yes,
promise you
sir.
that.
Thank you, Andy. So I did ask our people to submit questions, but before they do that, Andy, I just want to know what you would like to say. Like, tell us something about yourself, anything you want, and to let us know what's going on in the precious metal space or anything you want to talk about.
Well, I can follow your lead. There's certainly a
Okay.
lot to talk about, Kia. There's no
Okay.
question about it. It just seems to me that something serious seems to be taking place.
Mhm.
At the very least, these days, we could argue no one seems to trust our government anymore. And looks like our president is missing. We haven't seen him through all of the craziness that's happening. So,
Mm.
it just seems to be that things are getting a little bit more interesting. That's a Chinese curse. May you live in interesting times. So I do
Oh.
appreciate the kind words, and we are very proud of our reputation. I've been doing
Mhm.
this since I was 19 years old, and it's an achievement, one that I strive to maintain every single day. And being on a show with someone like yourself who has such a
Thank you.
supreme reputation,
Thank you.
it's an honor. And let's chat, see what's
Let's
going
chat.
on.
Yeah, you mentioned that the president was missing. That I didn't know, but I did hear a comment by I think it was the House Speaker that there are some hearings going on. But
I'm just being tongue in cheek in the respect that we shoot down 4 objects in 4 days or whatnot,
mm,
and we don't hear a word from him about it. He
mm,
has mouthpieces that come out and talk, but I find it disconcerting that the leader of this country
mm,
is in some respects absent
correct.
in
Mhm.
in what is, and our events that have got a lot of people rattled. So
Yeah.
you would think that at a time like this we would see and hear a little
Mhm.
bit more from the leader in chief, but I think it's just
Yeah.
kind of part and parcel with the mistrust of the establishment and of the government
Mhm.
these days. And
Mhm.
um, I think at a time like this, it would be nice to have a little bit of leadership telling us what's going on, and being a little bit more forthright about what's happening, where
Yeah.
these things are coming from, what they are. Instead, you have his press secretary come out and say, "Well, no, they're not extraterrestrials. It's they make jokes of it, and I don't like
Yeah.
that."
Yeah.
So I
Yeah.
was just being a little bit tongue in cheek myself.
Yeah. Yeah. Why make jokes about our lives and our potentially our safety?
Right? Exactly.
Um,
Exactly.
So one of the things that I've been talking about, Andy, I discovered this and I'm just thrilled, but I have a tendency to get excited maybe ahead of time. I want to know your thoughts about the 42 states. There was an article that came out that said 42 states have repealed taxes from the sales of precious metals. Now, I have my thoughts about what that means, but what do you think of that being, a CEO of a precious metals company?
My it's 42 states haven't done it all at once. I focus
Mm,
more on the states that haven't
Mm.
removed or repealed their sales tax legislations. And it
Okay.
doesn't make sense to me when you
Mhm.
start. There are very few of there are no investments that I can think of where you're starting 4, 5, 6, 7% behind the eight ball. And
Mhm.
the thing that I take comfort in is that several of the states, in particular, the article talked about Kentucky, Mississippi, Tennessee, Hawaii, and New Jersey having some sort of a bill in front of the state legislature to repeal this
Mhm.
sound money taxation, which makes no sense. Really,
Hmm.
the state of Minnesota, where I'm from, my corporate office is in the state of Minnesota. I moved to Florida a couple years ago, has maybe the most absurd
Hmm.
set of regulations. They tax legal tender coins, but give exemption to bars and rounds. So
Mhm.
they're applying 7% Minnesota state sales tax on American Eagle gold coins, which are legal tender. But a bar made by a private refinery has no sales tax. So a lot of this is counterintuitive, to say the least. But I think it's a step in the right direction. We've seen over the last few years states like Ohio,
Mhm.
and I feel so bad for the folks in Ohio near the train derailment. Now that I
Yeah.
think about
Yeah.
it, it's a horrifying video. But states like Ohio and I believe Tennessee just repealed theirs, as a matter of fact,
Mhm.
and other states who have recently repealed their state sales tax on precious metals. It is allowing their citizens to protect themselves against the debasement of the currency. And so it's a step in the right direction. Let's hope we see all of the states remove their state sales tax on precious metals. It just doesn't make sense whatsoever.
So if they do all remove the sales tax off of precious metals, does that make precious metals legal tender then, and just by way of there not being any
Well,
sales
there's
tax?
a distinction. It is already legal tender,
Okay.
um, but it's not currency. So
Okay.
you can evidence that by traveling with gold coins outside the U.S. to, let's say, Canada. If you brought 1 ounce gold eagles with you to Canada, they're $50 face value coins. Let's use a buffalo instead, since it's 24 karat and Canada uses a VAT tax. I tell a story all
Okay.
the time about my experience coming back from Montreal with 240 gold maple leafs in my possession, on my possession.
Mm.
And the experience that I had in Homeland Security, when you travel to the United States from Canada, you go through customs and immigration in the Canadian airport. And so
Okay.
it's U.S. Homeland Security. And to make a long story short, after spending 2 hours in a room in the basement of the airport, nearly, they came to the
Mm.
same conclusion that I knew all along, that those Maple Leafs $50 face value coins were legal tender. And
Mm.
I had 240 of them at the time. Gold was $1,200, nearly
Mm.
$300,000 worth of gold. And when the gentleman finally came back, he said to me, "I'll be damned. You're right. It is legal tender. You're free to go." And I
Wow.
said to him, "Well, why are you letting me
Mm.
leave after spending all this time in, further screening without any declaration? What's the deal?" And he says, "I thought you'd ask that." He says, "Because you're entering the United States with $12,000 Canadian legal tender, 240 coins times $50 face value." And
Hmm.
he said, "Today's conversion rate puts that at $9,700. You're free to go." The point
Wow.
I'm getting at is that it's legal tender, but
Okay.
it's not currency. There's a difference and a
Mm. Okay.
distinction. So maybe someday it
Mhm.
transitions to currency, but at this point, it is legal tender made by the United States Mint or a branch of the Treasury, but it is not something that we use currently as
Currently.
currency.
Okay. Okay. You talked about a lot of people mistrusting the government, whether it be outside of the country and inside the country. Does the use of precious metals help us to operate outside the system at all?
Well, I mean, when you realize that the use of precious metals allows you to be outside the matrix, so to
Okay.
speak.
Okay.
It allows you to have, I believe, some sort of an escape or liquidity.
Mhm.
See, to me, the whole problem, Kia, centers around the value of the dollar and the mismanagement of the world reserve currency. So yes, it would allow us to live outside that matrix, so to speak. The what if questions, how does it all play out?
Yeah.
That's difficult to answer. But I mean, look, when we talk about the mistrust, we talk about a national debt that keeps growing at exponential pace. And we're told by Janet Yellen that living within, or not by Janet Yellen, rather by some of the folks in Congress telling us that having a balanced budget, not raising the debt ceiling and living within our means is now viewed as irresponsible. And when Janet Yellen said that she would have to go to extraordinary measures to raise the debt ceiling, you won't find very many articles explaining exactly what those extraordinary measures were. But I'll tell you what those extraordinary measures were. They were borrowing from the Postal Retirement Fund, the Civil Servants Retirement Fund, and the Disabled Veterans Retirement Fund. We stole, in essence, from postal workers, civil servants, and disabled veterans in order to raise the debt ceiling. When you look at just how ishy that really, really is, we have a government literally that's addicted to spending. And let's look at it this way. In fiscal year 2022, the federal government spent or took in a record $4.9 trillion in tax revenue. That's a huge amount of money. And as recently as 2019, that $5 trillion in tax revenue would have covered the entire federal budget and left a $500 billion extra, maybe even to pay down the debt. But instead, we added $1.375 trillion to the budget and spent $6.27 trillion in 2022. And so now we have to raise the debt ceiling by stealing from these folks in order to borrow money to pay the interest on the debt. And what I mean by that is that the government spent $706 billion in 2022, $706 billion just to pay the interest on the debt. In other words, they have to borrow money just to pay interest on the money they've already borrowed. It's becoming insanity. And I think these are the kind of things that are creating not just mistrust here at home, but also globally. And, I think what is lost in all of this is that if you were to cut, let's just say we left alone defense spending, Veterans Affairs, Social Security, and Medicare. That's it. You'd have to cut 85% of everything else on the federal budget just to balance the budget. And at some point, it seems as though we've already gone too far. And how do we get back? And that's just one little piece of what I'm talking about. And we could talk for an hour about things that I see right now that are creating this mistrust. But indeed, I think that is certainly part and parcel what the big problem is. We weaponized the dollar against Russia. That created mistrust amongst many, many, many of the countries around the world who are now wondering if they're next on the chopping block. And it is creating a growing chorus of countries that represent, in some respects, nearly 80% of human population that are coalescing together against this, I don't know if you want to call it hypocrisy. It's perceived hypocrisy. It's just, I think we've kind of exhausted the good graces of our foreign creditors largely, and our foes in particular. We've I think, emboldened them and given them a reason to find alternatives to the system. And if you look, they're popping up everywhere. Every single week, we're seeing more and more stories about countries that are joining together or finding ways of trading with one another outside the system. And in particular, just the other day, Iran and Russia connected their banking system that both usurp or sidestep the SWIFT system. This is a growing trend. We saw the Chinese and the United Arab Emirates do this with the Project M-Bridge, which is allowing the central bank digital currencies that all these countries are developing to trade amongst one another, to settle amongst one another without going through the SWIFT system. The West is being cast aside because of not only the mismanagement of the currency, but the way that we're going around and weaponizing the dollar and telling you can use this and you can't use it. And this is creating all sorts of problems that I think are ultimately going to be a focal point, not what the Federal Reserve is doing by raising the federal funds rate by 25 basis points today. That's just a sideshow, if I had to guess.
So it sounds like all these countries have decided to do something to operate outside of the United States dollar. And so what people have asked me on my channel is what can we do? Because we currently live in America where the dollar has been decimated and reached almost near zero, and all the dollar denominated assets we know will probably plunge to zero. So what are we supposed to do?
Well, you're supposed to do what the biggest money in the world is doing and slowly de-dollarize, mitigate your exposure to the dollar.
Okay.
That's the bottom line. And how do you do that? There are very few ways to do it. The problem is that a lot of the ways that we would traditionally invest or protect ourselves have become not good choices. As an example, bonds. The bond market is where people would typically go when things got scary. And in fact, when I started in this industry in 1990, stocks were called risk on, bonds were called risk off. And as you got older, you would transition to bonds because it was considered a very safe investment. But in my opinion, the bond market is the mother of all bubbles. And as rates rise, the bond prices start to fall. If you go back to 1982, you see a trend going straight down at a 45-degree angle from interest rates at near 20% to where we are just a year ago with the federal funds rate at or near zero, or 2 years ago. And now we're starting to move back up again. And it's a problem. You buy bonds right now, not only do you have the political and the geopolitical risk and all of the de-dollarizing that's going on, but you also have the byproduct of that rising interest rates, which is an inversely correlated market to bond prices. As rates go up, bond prices go down, those that are in circulation in any case. So bond prices aren't a good place to go. And some may say, well, what about real estate? That's been great. It's been great because since 1982, interest rates have come down. And what happens when interest rates come down? Real estate becomes more affordable. People are able to take a bigger chance on or take out a bigger loan or buy more than they otherwise would. When I moved to Florida a year and a half ago, the 30-year mortgage was 3%. Now it's 7%.
Oh my God.
So when you talk about what happens when interest rates rise, it will start to push up the cost of money, which is inversely correlated to people's ability to buy real estate. So traditional forms of safety and of investment are starting to take on greater amounts of risk in this rising interest rate environment. You know, I try to be objective. I honestly, Kia, I really try to be objective, and I try to poke holes in what I talk about. I don't know a place that I personally would want to keep my money other than precious metals right now.
Yeah.
Because currencies around the world are being debased, interest rates are rising, and as interest rates rise, the pillars of wealth in this country, that being stocks, bonds, and real estate, will be inversely impacted. In other words, they'll fall. So where do you put it? It's a good question. It's a tough one. And I think the bottom line is it's a heck of a lot easier to make money than it is to keep it these days. I don't look at buying gold and silver as an investment. I look at it as an alternative to storing money in dollars in a bank. And when you talk about the systemic risk of the banks, I mean, it's horrible what's happening with the bank. I don't know if I was with you when we talked about the FDIC Systemic Risk Committee. And if I was, please forgive me, but I'll just, for the sake of those who didn't see it, there was the November meeting of the FDIC Systemic Resolution Committee, where basically they came out and publicly says a video, you can Google it, where they said, you know, there's going to be a run on the banks, and the institutions know this, but the unintended consequences of alerting the public to this are too severe. And they actually went as far as saying the public who has confidence in the banking system, perhaps more than the members of this committee do, need to know that there are bail-ins and that they will happen, but we need to let that happen organically. By alerting them to it will create unintended consequences. They are telling you right now, they are telling you that there are going to be bank runs, bail-ins, and major problems in the banking industry. So much so that I believe the second biggest bank in the world, the Swiss Bank Corp, was just bailed out for $10 billion by the U.S. Federal Reserve instead of by the Swiss National Bank. You got Credit Suisse right now, which is one of the too big to fail banks. They call it global systemically important bank, which means it's interconnected to all the other globally systemic interconnected banks. It's in a death spiral right now. Their stock lost 15, almost 16% Friday alone of last week to close at $3. I haven't looked at it today, but their pre-tax loss last quarter was $1.5 billion, making it the fifth consecutive loss. And they reported, think about what the Systemic Resolution Committee said. They reported yesterday that their clients had yanked out $100 billion in the fourth quarter alone.
Wow.
This is what the banks are afraid of. Runs on the bank. Give me my money before the whole thing collapses. It's a shell game. And I think these are the kind of things that are waking up not just people in this country, but people around the world. And when you have a government who says $5 billion for border security is too expensive, but $100 billion to the Ukraine, where we shouldn't even be messing, is okay, where you can't put any money towards the border, but in the 1.75 trillion omnibus bill, we put $410 million towards border security for Jordan, Lebanon, Egypt, Tunisia, and Oman. So things are really mixed up and backwards here. And I think that's kind of the impetus of what's going on here that is creating this de-dollarization globally. And what do? You do what the rest of the world globally, the most sophisticated money is, and that is slowly mitigate your exposure to the dollar, buy precious metals. If you're fortunate enough to be able to buy a farmland or to buy farmland or have a farm or agricultural ETFs or oil and gas stock, you see, broad diversification right now is not the place to be, period.
Okay.
You not want to be broadly diversified, but you want to broadly diversify within the primary trend. And that would be opposite the dollar. So I know you and Mark Z talk about a revaluation against other currencies. That's a good place to be, albeit it might be more speculative than owning gold and silver. It fits the bill in terms of a diversification outside of the dollar. And the things that I mentioned, precious metals, oil and gas, farmland, these are ways to be broadly diversified outside the system or within the primary trend. And that's the most important thing, because pure diversification is sampling of various asset classes, most of which don't move in harmony. The biggest problem with being diversified within the typical 60-40 mantra, 60% stock, 40% bonds, and even throw some real estate into that and some cash, is that as rates rise, all of those things collapse. And not only that, the dollar is being inflated away. So dollars are collapsing. And as rates rise, stocks and bonds and real estate are firmly in the crosshairs of that issue, that problem. It's a challenging time, Kia. It really is. It really is a challenging time.
Yeah, you talked about bank bail-ins and bank runs. It put me in the mind of something I was reading by Jim Rickards, where he was talking about when all the countries drop the dollar and you see the dollar plunge to zero, then you could have an ice nine scenario. And my limited understanding of that is that everything could freeze. So I want to
same thing as Project Sand that Mike Adams talks about. It's very similar to what I've been talking about for a very long time, where it's as simple as Saudi Arabia and OPEC dumping the dollar as the petrostatus dollar or the world reserve currency because of its petrostatus, and opening up oil sales to other currencies, or maybe gold and rupee and ruble and yuan, or maybe it's the new BRICS currency, or maybe it's the new settlement currency that the Shanghai Cooperation Organization is talking about for all of Eurasia. The point of it is that it's coming. As far as I'm concerned, you can see the pieces being put into place. And what Jim talks about, or what Mike Adams talks about, or what I'm talking about, they're all the same thing. And that is exactly right. Everything will freeze up, and everything will absolutely reset, if you will, to a new system, a system that is based probably upon commodities and transparency rather than debt instruments and in a model that is completely and totally opaque.
Are you actually talking about, are you including in this freezing like ATM cards not working, people that have EBT based on the welfare, that not working? Like, could we expect something like that to actually happen? With you can't
Yeah,
get your
absolutely, 100%. I mean, it happened
wow.
in uh, not in Greece, but in can't think what
Hmm.
not in Greece, but right next to Greece.
Rome, Italy. Somebody help us, family.
And it'll come to me in a moment.
Okay.
But when the banks failed in Greece, I can't believe I can't think of the name of it. It'll come to me.
Okay.
Anyways, they were only allowed like $75 per day out of their ATMs. But if the whole system freezes up, if the whole banking system freezes up because they're all systemically tied together, Cyprus, thank you. Thank you. That's right. That's exactly the scenario that you would be facing. And in terms of entitlements, yeah, I mean,
God.
how do you pay for entitlements if the country is upside down? God forbid. But yeah, that's always a possibility. And it's really, really very important to realize
Hmm.
that is a possibility. I would like to hope that it isn't, but
Right.
it really, truly is. And,
Mm.
history doesn't always completely repeat itself, but it often rhymes. And to think that we couldn't find
Mm.
ourselves in another depression, shall
Yeah.
we say, I think is foolhardy. To think that things will always get better is foolhardy. And if you look at the things that are happening in this country, they're so counterintuitive to what should be done
Mhm.
to
Mhm.
fix the problem. And instead, it seems like the actions of our administration are only exacerbating the problem. So, yeah, I think it is an issue, and I think people do need to protect themselves however they can,
Okay.
best they can. I truly do.
So before we get into some questions, I'm just wondering, like, it's kind of hard for me to imagine. This is kind of scary. Like, you go into the bank, your ATM card doesn't work. If people that are on food stamps, they can't get food for their children. People are doing bank runs. You can't get access to your money. How do you pay your bills? How do you pay your mortgage? What are we supposed to do?
That's a good question. Imagine the banks aren't even open.
Oh,
During the pandemic, the banks were allowed to relinquish the paltry reserve requirements of 3 or 4% that they had to maintain to zero. So these banks have very little, if any, reserves against massive liabilities. To say the least, if you're going and depositing $50,000 at a bank, they're not leaving that bank there. If they're not making loans, and I'll get to that in a second, they're probably putting it into 90-day treasuries or something more like what's happening right now with the Federal Reserve. As an example, the Federal Reserve right now is paying 4.3% on the overnight repo market, meaning the banks who don't want to lend money to you and I, they put it into called the reverse repo market, where
okay.
they give the money to the Federal Reserve, who gives them treasuries, and overnight return is annualized at 4.3%. So and it goes back and forth every day. So the banks, and it doesn't really show up on their books as being a bailout or whatever you want to call it. They're being able to give the money to the Federal Reserve with no risk and earn 4.3% right now, instead of lending it out to you and I. And the excess reserves that they have on hand, and they're parking at the Federal Reserve, is at 4.65%. What I'm getting at is that the banks have no interest in lending the money out into the system that they know is in trouble. Instead, they're giving it to the
Mm.
Federal Reserve and earning 4%. Instead of using a credit card or putting that money to a credit card to give to you, that they might get paid 18%, but the risk isn't worth it for them. They'd rather make 75% less return, but leave it, take that back. They'd rather make, which would be 300% less return, and leave it at the Federal Reserve than give it to you, because I think that speaks
Mm.
very loudly
Mhm.
about just how bad things are. But things aren't any better for the Federal Reserve. At the same time, the Federal Reserve's net income just turned negative in September. And so they're have negative equity right now of over $31 billion in operating losses. And that's happening because over the last several years, if we go back to 2008, their balance sheet was $800 billion. Now it's $8.5 trillion. So
Oh, wow.
that all of that increase in their balance sheet was done to create an illusion of health and prosperity. And they did that by taking on massive positions in mortgage-backed securities. Think 30-year mortgages at 3 and 4%. That's what they were. And then think U.S. Treasuries at 1 and 2%. That's what they were. So their assets, which are way out into the future, 10 and 30 years, are super low interest rates.
Wow.
Their liabilities, which are very short term, think the reverse repo market and the excess reserves that the commercial banks are giving back to the Federal Reserve that they're obligated to pay a return on, are between 4 and 5%. And they're already 31 billion in the hole. They're going negative. And as rates rise, the bonds that they hold on their balance sheet become worth less and less and less. Now, there are a lot of people out there that think this is a war between good and bad. Maybe it is. Maybe this was set up to blow up the Federal Reserve.
Yeah.
With all of the debt they have, all of it interest rate sensitive, if interest rates spike, what happens to the Federal Reserve? There's an old saying out there, Key, and it's something like this. If you own the bank $200,000 and you go broke, you're in trouble. If you own the bank $200 million and you go broke, the bank's in trouble. Now think about what the Federal Reserve has in terms of liabilities versus assets. Currently, the Federal Reserve has a $8.5 trillion balance sheet against capital reserves of $35 billion. Their balance sheet is effectively insolvent and roughly 200 times leveraged. As rates go higher, it only becomes worse. And in that Jim Rickards scenario, where everything freezes up, or in that Operation Sandman scenario from Mike Adams, or in the scenario I talk about where BRICS accentuates itself with a new currency that is backed by commodities and is now the new settlement currency for oil, it's over like that. And interest rates spike, stocks, bonds, and real estate collapse. But what about a balance sheet of the Federal Reserve, which is massively inversely related to rise in interest rates? These are crazy times. And that's why you need to protect yourself. If you're not a contrarian right now, I think you're a victim. I really do.
Thank you, Andy. Somebody just asked, how long could this scenario happen? How long might we experience something like this?
Well, I don't know how long we will experience it, but I mean, if you believe in a resetting of the system, this could be the impetus that actually does it, that actually resets the system. And maybe this is why you're seeing all of these relationships that are being made, including from countries that we've always typically been very friendly with, like Turkey, who now just joined the BRICS nations and was the largest accumulator of gold in the world in 2022. These are countries that are making their move quietly. It's a game of chess. They're moving the pieces into place before they call check, before they call checkmate. You're seeing deals that are being struck, like China just inked the second deal with Qatar for liquid natural gas. The last one they did a few months ago was the largest in the history of the liquid natural gas market. Between the two of them, they're completely taking massive deals that always used to settle in dollars that are now, in this case, settling in the Chinese petro yuan bond. That petro yuan bond is immediately convertible into gold on the Shanghai Gold Exchange. So maybe Qatar is selling their liquid natural gas for the petro yuan bond and converting it into gold, which then goes back to the balance sheet, which will then be a tier one reserve asset, which we've talked about before, the only other one in the world that will then be intertwined into a new system that uses commodities and transparency versus debt instruments and no transparency whatsoever. You can see the pieces that are being put into place if you look closely enough. And the moves that we are making are counterintuitive. Heck, Russia or the United States just told all U.S. citizens in Russia to leave immediately. This is getting serious. And if people don't see this happened on Sunday. If people don't see this, I don't know what they're looking at. Russia cuts oil production by 500,000 barrels per day. This will reignite inflation here in the States. This will get everyone's talking this soft landing and inflation subsiding. No, you haven't seen anything yet, as far as I'm concerned.
Mm-hmm.
But these are the moves that are being made around the world every single day to, create what I believe will be a new reality. And countries like Egypt, their reserves increased, gold reserves by 33% last year, third highest in the world.
Wow.
South Sudan just suspends the use of all dollars for commercial contracts. China keeps buying gold for the third straight month. They bought 15 tons this month, 32 tons last month, and 30 tons the month before. So, you can see it if you look closely. All of these deals have one thing in common, and that is de-dollarization. That's the moral of the story. It is trust your gut. Don't do what they're saying. Do what they are doing. And I guess I would sum it up this way, Kia, and say it's like central banks appear to be actively preparing for war. They do. I mean, or at the very least, massively de-dollarizing. I'll give you an example of what a war chest is. JP Morgan just came out with a report. This is what China currently holds, according to JP Morgan. 80% of the global copper inventories. What have we been hearing lately? Copper's disappearing. 70% of the global corn inventories, 51% of global wheat, 46% of global soybeans, 70% of crude oil inventories, and 20% of global aluminum inventories. The London Metals Exchange talked about 2022 that aluminum inventories fell by 75% on the London Metals Exchange, 140-year-old exchange, 70% down. And who holds 20% of the global aluminum supply? China does. That's a war chest. This is a country that is accumulating assets, accumulating commodities that you need. And there's another old saying, assets feed you, liabilities eat you. So yeah, I think when you put all of that together and then see what Saudi Arabia said in Davos a week ago, they told the world that they're open to taking other currencies for oil other than dollars, and they've recently joined BRICS.
Yeah.
What more do you need to see to realize that the game is in motion? And if you sit there like a deer in headlights, you're in trouble. And in a game where there are no easy choices, I will fall back on the 5,000-year history of gold, which has lived through 2 world wars, German hyperinflation, the Great Depression, and every pandemic before it. Is there any guarantee? No, we don't live in a world of guarantees. But I do believe that it gives you the best chance of surviving, because the biggest money in the world has been on a several-year spree of accumulation of metals, using the suppressed price on COMEX to accumulate it, to run cover for their acquisitions.
Yes, and that was a question somebody had asked. Why are they suppressing the prices? But I think you just answered it. It's so that they can accumulate the gold and the silver.
Well, it's not just that. That's part of it. That is part of it. But gold and silver are not commodities that they want us to believe. Gold and silver are the canaries in the mine shaft. They are the mirror image of the dollar and the Western system. And if you have gold and silver screaming higher, it speaks to the fragility of the system. It's like the movie The Wizard of Oz. When you pull back the curtain and see a little frail old man, instead of the booming voice that was the wizard, that, you could argue, is what they are trying to hide. We are a country that is $130 trillion in debt. Now, everyone talks about $31 trillion debt. Medicare, Medicaid, Social Security, government, military pensions are north of 100. Social Security is 55 trillion underfunded as is, with IOUs. How about raising the debt ceiling? Janet Yellen raises the debt ceiling by stealing from postal workers, civil servants, and disabled veterans. That's how they rose the debt ceiling. We're broke, we're insolvent, and if you pull back the curtain, you'll see a little frail man, not the booming voice that is the U.S. That is why they don't want to let gold and silver go higher. But our enemies, like in the jitsu, where you use your opponent's leverage against them, are using this against us. And they are doing so by emptying the London Metals Exchange and emptying the COMEX and taking deliveries of massive amounts of metal. Heck, India just imported 304 million ounces of silver last year. That's 10 times the amount of silver that is backing the registered category in COMEX. It's more silver that is in the entire COMEX ecosystem, of which probably 80% of it is not for sale. Those are bars held by investors like myself, or companies, or hedge funds or family offices or all of these things. So yeah, this is a system that is certainly skating on very thin ice.
Thank you, Andy. So if you're okay, I'm going to ask you a few more questions that the audience has.
Sure.
And if you see any that you would like to address, that's fine too. But one, somebody had asked me, they said, if you own an IAU and PSLV in the market, what's the advantage of physical silver and gold?
Well, I don't know so much about IAU, but PSLV and PHYS are the Sprott
Mm,
physical trusts. And
mm,
the thing about most of these, they're ETFs, if you will, or paper forms of owning precious metals,
yes.
is that you can't really take possession. Now, someone will say,
Mm,
well, PSLV, you're able to take possession. Well, in PSLV, you have to take 10 1,000-ounce bars. In PHYS, you have to take one 400-ounce gold bar. It is very impractical to take
mm,
possession. And I think when you talk about something like PHYS or PSLV, very often they sell at what's called a discount to net asset value.
mm,
I won't get into the weeds on that one, but what it basically means is that that's when you'd want to buy it, when it's selling at a discount. You're able to buy
okay.
it for less than the metal that is inside the fund represents. But what I'm talking about is buying physical metal that for the past 3 years has had massive premiums attached to it, which
Mm,
is a function of supply and demand. I guess I'll answer it this way. If
okay.
the you know what hits the fan, Kia, do you want boxes of Frosted Flakes or stock and Kellogg's? So there are times when
Mm,
stock and Kellogg's will be great, but I would prefer the
mm,
boxes of Frosted Flakes
absolutely.
in my pantry. It's the same thing here. I think that when you talk about gold and silver, what they
Mm,
represent is the complete and total removal of counterparty risk. And
yes.
although I fully trust Eric Sprott, who I believe is a hero in this industry, they are the owners or the purveyors of PSLV and PHYS. They are a
Mm,
publicly traded company with a phenomenal reputation, and I'm proud to call many of their employees my friends. It's not the same thing as owning the real thing. It's a
mhm,
derivative.
mhm,
May be the best possible choice, but to me, physical always is
mm,
always a better choice than the paper derivative. And in particular, in a world that is systemically connected, incestuously tied together,
mm,
I think the removal of counterparty risk is important. And that's when you talk about gold and silver, they
mm.
are assets that are not simultaneously someone else's liability.
Yes. I honestly think you convinced us that we need to be in the gold and silver. Because one of the questions somebody asked me is how much should they have? And I don't even know if we can even answer that question, but how,
I would look at it backwards. A
okay.
trillion seconds ago was 31,688 years ago.
Mm,
31,688 years ago is a trillion seconds. We have $130 trillion in funded and unfunded liabilities. I'd
okay.
work backwards from there. What exposure do you want to a system that is in the ninth inning of a game and has exhausted most of its good graces globally?
Okay.
And I'd work backwards from there.
Mm,
You know,
mm.
the financial advisor will say 5%, and that's because
Yeah.
they don't make money doing it. And I think that
Mm,
you need to reevaluate. Even the best laid plans need to be reevaluated. Um, it's a personal decision. If I told you what I owned, I'd lose all credibility. Look, I don't care. I'm almost fully invested in gold and silver, and I own one of the largest
mm,
metals companies in the world, or in
mm,
the United States, rather. And do I fully admit I'm not the poster child for Finance 101, and I've
mm,
missed a lot of opportunities over the years, but I sleep very well at night because I know that when the circle comes full circle, I'll be in the best possible position.
mm,
So I guess it's a question of what's more important to you, return on or return of. One of the
mm,
neat things about silver right now is it checks all the boxes in that it offers amazing upside potential, better than anything out there, in my opinion, while at the same time, there's no counterparty risk if you own it. And it to me is the value and the opportunity of a generation. Um, I don't think there are many assets or investments that I could think of that have the supply side fundamentals, like it's depleting in nature, It is massively needed in industrial applications that are expanding. It's experienced a monetary renaissance. And at the same time, it's selling for 20% under its half of its all-time high. So, I mean, it ticks all the boxes. It's being accumulated copiously by the biggest money in the world. It's needed for electric vehicles and for solar panels and this green push that we're going towards. There's 500 ounces in the tip of every Tomahawk cruise missile, almost to the ounce. It's needed. It should be considered a strategic metal rather than an industrial metal. And maybe this is why you're seeing such a drawdown of stockpile off the COMEX. Maybe this is why you see JP Morgan accumulate a billion ounces of physical silver and at the same time pay a $920 million fine to the Justice Department for suppressing the price. And at the same time, that trading desk that year, 2020 or 2019, they paid it in 2020, I believe, but the year that they paid that fine of $920 million, it was the largest fine ever paid to the Justice Department. The trading desk, their metals desk, made $1 billion. They walked away $80 million up and are still allowed to be the custodian of the world's largest silver trust, SLV. So maybe they're actually doing it on behalf of the U.S. government. Why do I say that? Because Blythe Masters, who used to run their desk many, many years ago, was asked about this on TV, and she said, "It is not our silver; it's for a client." Well, who the hell is the client that has that kind of money? It's either the U.S. or the Chinese, one or the other. And I think it's probably the U.S., if I had to guess, because they've exhausted their strategic stockpile years ago. So the fact that they're not letting it go to the moon is not only about allowing them to de-dollarize, whoever them are, whether it be us or them. All of the big players are de-dollarizing and using gold and silver as a form of that. But at the same time, it's allowing them to accumulate what are very important strategic stockpiles that have a finite supply. You can't just reproduce gold and silver.
That's right.
You find it. And if you realize that, you know, for 5,000 years, there was a 16-to-1 ratio geologically between gold and silver, meaning for every ounce of gold you pulled out of the ground, you'd find 16 ounces of silver. And right now it's 7-to-1, meaning the silver is depleting. It's been cut in half in its relationship to gold because it's found in nature in a form called epithermal, very near the surface. The big deposits were found decades ago. So silver is depleting, yet it is being more and more and more needed in industrial applications and demanded in monetary applications. The price is a tool of misdirection because it represents the denigration of the U.S. system and the dollar. It is the Achilles heel to the U.S. system, that being rising gold and silver. It's not like rising wheat or corn. It's not even like rising oil. It's much more than that from a historical context.
Yeah, I hear you talk about silver. As a matter of fact, I've heard you and Big Swear in conversations talk about silver and gold. And one of the things he says is, since silver is used in so many industrial purposes and it's low right now, it would be a good idea to buy silver. And I think the ratio is kind of why buy silver now and then you can trade it in for gold later when that ratio, I guess, decreases. So.
Right. And that's the way, that would be the way to do it. Yes. If you wanted to convert to gold, I'll give you an example of how that played out in real time.
Okay.
2010, I had been speaking publicly at conferences for a few years, hadn't done any YouTubes, but had friends in the industry that had. And I realized that we had slipped into an 85-to-1 ratio between gold and silver. And I did a little digging and realized it was like the second time in human history that it had happened. So I got on the phone, called my YouTube buddies, called all my clients and said, first I told my YouTube buddies, we got to do some videos. And then I called my clients and said, you need to sell me your gold. I'll sell it to the market right now. And let's trade that into silver. And in theory, every ounce of gold that you would sell, you'd get back 85 ounces of silver. That was the ratio. And then twice in human history, this is one of these deals. This is an anomaly. You got to do it. Most of the people I talked to did. Within 7 months, mid-2011, we had $50 silver and $1,915 gold, which is 37-to-1. Now, to put that into context, For the past 200 years, the average has been roughly 42 to 1. This has a lot to do with the Industrial Revolution, with logistics related to money. Even though it's been coming out of the ground all that time at 16 to 1, the price ratio was set at around 42 to 1. And it had been fairly consistent for the better part of 2 centuries. And when you see the fact that it's not only coming out of the ground at 7 to 1 now, not 16 to 1, and that it is trading at, twice its 200-year average and almost 11 times its geologic average, it's way out of whack. But those that would have made that trade in 2010, traded 1 ounce of gold for 85 ounces of silver, 7 months later would have only needed 37 ounces of silver to go back into 1 ounce of gold. Wow. They would have made 2.5 times what they started with, or double what they started with, and covered any tax ramifications. So it's one of these deals where I think anomalies are something to exploit and take advantage of. I live in southern Florida, and if I woke up in July and there was 4 feet of snow on the ground, even though I spent 50 years of my life in Minnesota and have 2 snowmobiles in my sister's garage, I'm not going to call her and say, Betsy, could you please send me my 2 snowmobiles? I want to go for a ride this week. Because I would know that 4 feet of snow in Delray Beach in July is an anomaly. Well, that's exactly what we've seen, albeit an extended anomaly. It stayed in this range longer than I would have anticipated from a historical context. It's a truly remarkable value. All of this goes into my thought process, why I think silver is the value of a generation. The fact that I sell it, sure, but I try to look at this from every angle, and I can't see an angle that lets me think otherwise. And maybe the U.S. can pull a rabbit out of their hat. The only way that I think that they could do that, and I thought a lot about it. I was asked a question on a Kitco interview I did the other day, and it came to me when she asked me, and the only thing that I could see them doing the other day, the International Monetary Fund came out with a report. The International Monetary Fund is a group of somewhere around 200 countries from around the world that was formulated at Bretton Woods at the end of World War II. And one of the things I would talk about in my thesis about the de-dollarization over the last few years was in 2020, they came out with a report on their website saying, we want a new Bretton Woods. Well, Bretton Woods is what made the dollar the world reserve currency. It took over for the British pound sterling at the end of World War II. And they call it Bretton Woods because the Allies all met in Bretton Woods, New Hampshire, and did all this stuff, formulated the new system after the war. They came out a week or two ago with a report, and I'm going to paraphrase it to my recollection. It was something like gold as an international reserve, a barbarous relic no more. And so you have the IMF saying it's not a barbarous relic and is internationally known as a reserve. Remember, it was the only other tier 1 reserve asset as the Bank of International Settlements reclassified it in 2019 next to US dollars. And now the IMF is saying it's not a barbarous relic. So if the IMF came out, a lot of people that in my industry thought if there was ever a new currency, it would be what's called special drawing rights from the IMF, a conglomerate of all of these countries putting together to make a new currency backed by all these countries. What if the IMF came out and issued a new currency backed by gold? And the U.S. embraced it, where the U.S. and the IMF issue a new currency to compete with the BRICS nations, beat them to the punch, if you will. And you would beat them to the punch by issuing a gold-backed currency before they do. Now, just a couple of caveats to that. It will not be convertible.
Okay.
Because I believe President de Gaulle from France proved that convertible currencies convert. And that's when he came and realized we were printing more dollars than we had gold backing it when the gold was when the dollar was backed by gold. And he sent warships to New York Harbor filled with dollar bills and said to President Nixon, give us gold. And he did, and bled down the gold at the reserve between them and Switzerland, taking all the gold. We shut the gold window. in 1971. And I don't think it will be 1-to-1 either. I think it would be a small percentage, maybe 10% of every new currency unit is pegged to gold. And they would use distributed ledger technology to show the veracity of the gold backing the system. Here again, the real issue is who's holding the gold and who's auditing it. And there are even some, call it stablecoin backed gold programs in this industry right now that are coming under fire, big fire, about that same question. I'm not going to mention any names, but if you're in this industry and you know of companies that issue gold-backed programs, those are the ones that are coming under real big fire, whether it's justified or not. It's not what I'm saying. I'm not levying an opinion. But I think the one thing that would be most important about a country trying to peg gold to a new currency would be to show the world, yeah, here it is. Here it is on the ledger. Here's who's auditing it, and here's where it's at. So a lot of pieces are moving, but look, pardon my French, I think we screwed the pooch, and I think we've exhausted the good graces of our foreign creditors on many levels, and now is the time to realize that if you are fully invested in dollars, I think you're making a big mistake, and you don't have to have a lot of money to protect yourself. Now, I do want to mention something, because there was one of your clients, and I know they spoke with one of my brokers, and I felt very bad about it. And I know my broker did too. The client wanted to spend $100, maybe $200. And the response by my broker, I wasn't on the call, was that, well, you might want to go to a local coin shop because the cost of shipping, which would be $15 on a percentage basis, is an awful lot when you only have $100 or $200 to spend. And I told him to send them back a message and saying, we're happy to take your order. They sent me an email, and they were upset by that because they felt it was insensitive. And perhaps it was in the way it was communicated. I don't know. I just know that he called me, my broker did, very upset, saying that was not the way I intended. I was looking at their best interests. What I'm getting at is this. We're willing and happy to work with anybody, but there are costs to doing business. I'm okay if someone wants to spend a few $100s on silver. They're going to pay shipping expenses. So establishing a relationship with a local coin company is not a bad idea whatsoever. It really, really is.
Really, I agree. Yeah. Because I mean, shipping costs have to be considered when you could just drive down the street. Yeah, I do understand that. So, Andy, I thank you so much for the wonderful explanation of what's going on, how we should prepare. I'm sorry. Have you seen any questions in the chat that maybe while you were speaking that you want to address before we close out?
No, I think we pretty much covered all of it. But what I would love to do is come on your show maybe even once a week and do it this way, so that we can address questions as they come up. I would love it if that works for you, once a week, once every other week.
Sounds
and do
good.
it this way in a live stream fashion. I think it would be great.
Okay. I've been accused at times, Andy, of sounding like what they call me, a snake oil salesman.
The furthest thing from it, Kia. You are the furthest thing.
A shiesty automobile saleswoman. Because I'm always promoting buying precious, investing in precious metals, and I can't help it. I really believe in it, Andy. I believe in you. I believe in the product. I have a good relationship with my broker. Everybody that has a relationship with their broker said that you all do excellent customer service. So I just want to ask you to please let us know what we should do if we are interested in maybe a gold IRA, or if we're interested in adding gold or silver to our portfolio.
You just simply send us an email at info@milesfranklin, ask for a current price sheet, and ask any questions you want, and you'll be contacted right away. And that's what we will do. Our new website is almost ready to be launched.
Yay.
Until then, send us an email at info@milesfranklin, and we will make sure, put Kia sent me in the subject line, and we'll make sure it's the best experience ever.
Thank you, Andy. Any final thoughts, Andy? You've been
Trust your
wonderful.
gut, Kia. Trust your gut. That's
Okay.
all I can tell you. Your eyes are going to lie to you. Trust
Mm,
your gut, and take care of of your family. You can only save the world one person at a time, starting with
wow.
yourself and your immediate family. So I really appreciate the opportunity to be with you so
Wow.
very much, and
Yes.
I want to keep doing it
Okay.
and help your listeners and grow the base of knowledge together. And I couldn't be more honored to be part of what you're doing.
Thank you, Andy. I appreciate you being here. I appreciate the relationship. I'm honored. I've met some wonderful people that's a part of your team. And I look forward to doing this again. I will contact you later to see if we should do this every week or every other week.
I'd love to. Count me in.
Okay. All right, family. Thank you so much for joining us. I know we've said something to raise your vibrations and inspire you to create the most amazing, magnificent life that you desire and deserve. Happy Valentine's Day. Bye, Andy.
Bye bye.
Bye, family. Well, family, if you're still here, Andy just left. I think I will take some questions for a second. Thank you. You said it was a wonderful show. Thank you. Thank you for being in the building. Thank you so much for taking the time out of your busy day to ask questions. Andy is a very busy man. He has a multi-billion-dollar company. I think he's at $8 billion in sales right now. So he is extremely busy. He's always on the lecture circuit. He's doing conferences. He's on conference calls. He's speaking at different places. He's just always doing interviews as well. So we give thanks and honor that he was here with us today. Are there any other questions maybe that I can answer for you? You're welcome. You're welcome. Yes. So yeah. You're welcome for our advice and time. It's always an honor to be here with you all and for you all. So happy Valentine's Day, people, family. People are checking out. If you buy gold and silver, is it being held in the depositories? Is it safe? Yes. As a matter of fact, I have asked Andy Schectman that question. Please contact him at andy@milesfranklin.com or info@milesfranklin.com because he does work with companies that will protect your assets if you desire to have them in some type of what do you call it, depository. I don't know if he works with Brinks, but I know he works with some of the top rated companies. He can send you that list. He can talk to you about how that works and give you can go on from there. Thank you, Patriot Mom. That was an excellent question. Oh, I'm glad you all appreciate the information. Andy's awesome, isn't he? Roger Ball. So you're welcome. I really don't want to keep you too much longer. First time visitor. Hi, Mark. You're welcome. Andy is amazing. Good evening, Mark. Yes, he is. I will keep this up as soon as I end the broadcast. Then you can go and listen to the replay. So God bless you all, family. I love you so much. Andy is awesome. Again, send him an email, info@milesfranklin.com, and let him know you want a price sheet, that you're interested in metals. He'll answer any of your questions. And he will also send you a list of any type of specials that he may have. He usually have specials running every week. So he'll send you that. Let him know that Dr. Kia Pruitt referred you, and you will get the best price and the best customer service. So he is awesome. Family members are saying happy Valentine's Day and buy silver. Oh, thank you, Joe. You're so awesome. All right, family, I'm going to go find some food. It is Valentine's Day. Yes, yes. I want to see if anybody going to love on me today. Give me some flowers or something. You wanted to let me know that you're so happy. Oh, thank you, Mary. I am honored that you said that. Wow. Yes. Thank you. MYM Christian News Channel 17. Are you on there? Okay, I am so happy that you found us and that we found you because I believe that we attracted each other. Thank you. We finally found our soul family. So hit the like button on your way out, family. We're about to check out. Like the video, subscribe to the channel. Yes, share the video. Thank you so much for all your monetary blessings in the super chat, the super stickers. People have been sending me Cash Apps, and I'm so grateful. You all know that YouTube had silenced me for a couple weeks in December and a couple weeks in January, but you came through and helped the sister out. Thank you. I appreciate you. Yes, somebody asked for my Cash App. It is $Mama Kia 13. That is $Mama Kia 13. That's it. I appreciate all the blessings, all the monetary gifts, all the love, all the showering, the email. You all email, and I do my best to get right back to you as soon as possible. Everything that you all have done for me, I thank you so much. I love you. I'm going to leave out of here so I can go get some food to eat. I'm always hungry at the end of every podcast. Mwah, mwah, mwah. I love you. Bye-bye. Take care, family, and make it a great day. Peace. Happy Valentine's Day.